Good afternoon, and thank you for joining us at the Yeshiva University Open House. My name is Robert Friedman, and I'm the University Director of Student Finance at Yeshiva University. During this presentation, I hope to share with you some information that will help you get through the financial aid process and to think about how you're going to finance your son or daughter's education, and to show you what Yeshiva University has to offer. Some of the topics that we'll be discussing over the next half an hour are just general financial aid terms, things that you're going to need to know as you approach the process, especially if this is your eldest child going through the financial aid process. What is financial aid? Cost of attendance? How is an estimated family contribution calculated? How does a school determine financial need, and so on. And we'll finish by talking about a year of study in Israel and what kind of financial aid you might be eligible for a year of study in Israel through the Yeshiva University Israel program. So just to start with, it's always good to just lay down some definitions about what is financial aid, right? On screen, there's 5 bullets, and that in the financial aid world, that's the definition. Scholarships, grants, loans, and employment opportunities. Right? I know that many of you do not want to talk about loans, but we're going to talk about them anyway. But note that they are part of the financial aid package. Certainly, working on campus, many folks are eligible for the federal work-study program. You all want to know about scholarships and grants. That's probably why you're joining us this afternoon. And finally, tax benefits. There are some tax benefits through the IRS that families might be eligible for. But note, that's financial aid after the fact, after you go through the year and file a tax return for that year. So you should be talking to your accountant about what potential tax benefits are available to you as you move forward throughout the financial aid process and with all of your children. And another definition that we need to tackle is this term of need. It's a very tricky term, financial need. How is it that a school can determine that one family is needier than another family? Well, if there was a definition, it would be what you see on screen. Cost of attendance minus the expected family contribution. If that's a positive number, that's your financial need. I'm going to talk about those two, about the two components, cost of attendance and expected family contribution, more in a second. But note, folks, it's not a perfect system. We do our best to collect common information from everybody, especially at Yeshiva University. We even collect information that's not on the FAFSA to help us determine your level of funding. But this is what schools are doing, all schools are doing across the country, right? On screen, you got cost of attendance broken down into 2 components: direct costs and indirect costs. Direct costs on the left, tuition, fees, room, board, and health insurance. You got to pay attention to health insurance. Those are things that the school typically will charge you for. That's why we call them direct costs. Obviously, mom and dad, if the student is not going to live on campus, then the school is not going to charge you for room and board, and then those will move over to the indirect cost side. Health insurance. Most of you will waive out of the university's health insurance plan for your sons and daughters, and there will be a process to waive out. Just please pay attention to that. Most of our undergraduate students at Yeshiva University wind up waiving out for their 18, 19, 20-year-old students of the health insurance plan. Schools will charge you for health insurance if you're not careful, and if you're not, if you just do absolutely nothing, schools will charge you for health insurance. So please pay attention. It's not a cheap thing. You will notice it on your invoice. Certainly there are indirect costs. I've listed many of them there. Indirect is just a fancy word of saying out of pocket. So it's our way of telling you that there will be other costs associated with college, as you know, in addition to what the school will charge you for. Yes, books, computers, supplies, and you see other things there. And let's not forget the personal expenses too. Students will spend money. Folks, indirect costs will vary widely from student to student, from school to school. Even in your own household, you'll get one student who doesn't really spend a lot of money and another student who does spend money. And I'll leave that to you to know who in your household, which children are the spenders and which ones are the savers. So indirect costs are something to be reckoned with as you move forward. The next definition that we should probably get a handle on, and is one that most of you will want to know, is how is this thing called the expected family contribution calculated, right? And it is a federally driven number that we come up with. And I put the picture of the Capitol here on screen to let you know that who makes the determination about what goes into the expected family contribution? Yes, the people we elect to Congress, the people we elect to the White House. For state aid, it's people that we elect to Albany and to Trenton in New York and New Jersey. Very, very important that you understand who's making the decisions about what goes into the methodology that the federal government and the state governments use. So, but this is what most people want to know. And it's really the top 3 bullets on this screen right now. The first bullet speaks to how many people are in your household. It's very, very important. It's not saying how many exemptions do you take on your tax return. It is literally saying how many people live in the household, the same household that the student is living in. Further, it will ask you how many of those people are in college as well. Okay, so it's not, many times it is exactly the same as the exemptions on your tax return, but there are plenty of times when it is not the same. So please be really careful when you get to that question on the FAFSA. Certainly, they're going to ask you for your adjusted gross income. For the students who are applying for the 22-23 academic year, it's going to be your adjusted gross income for 2020, right? So 2020 filing season has been extended to May 17th of this year. So by the time you sit down to file the FAFSA, everybody should have filed their 2020 tax return by then. That's why they're using 2020. It will be the most recent tax return that you will have filed. And then they will ask you for investments, assets, and business value. There's a couple of exclusions, though, that you need to know about, right? The FAFSA will never ask you for the value of your home. Very important that you don't include your home value as an investment to your benefit. They will ask you the value of real estate, but they're not asking for the student's primary residence. So that's one. 2, the other one, the other big exclusion is retirement accounts, right? They will never ask you for the value of money that is in a traditionally labeled retirement account, meaning a 401k, a 403b, a pension plan, an IRA, a Keogh account, something like that. So you don't have to report the value of your retirement accounts as well. In addition, business owners, small business owners, if you or your family owns more than 50% of a business and you have fewer than 100 employees, you don't have to report the value of the business. So that will not come into play for many of you, but for some of you that will be very important to know that you don't have to include the value of your business if you fit that definition. So those are the big parts of determining financial need. This chart on screen is the same formula that I presented you with. Cost of attendance on the left. You can have 3 different schools, 1, 2, and 3, with 3 different costs. Not all schools cost the same thing. Your expected family contribution is deducted from your cost of attendance. Your expected family contribution will be the same. It's constant. It doesn't ask what school you're sending your son or daughter to, that your son or daughter will attend. Your expected family contribution is the same no matter what. What we're trying to do is fill up boxes X, Y, and Z on the right with as much aid as possible. This is how a public school and a private school might cost the same thing. If I can fill up box Y with as much financial aid as possible and bring your costs down to whatever your expected family contribution is from the feds, and at the same time a public school can do the same thing, well, then we have just mirrored the cost of a public school. That's how it happens. It happens all the time. And you should know that private schools are affordable, especially at Yeshiva University. We are very, very affordable if you follow these steps. Where does the money come from, right? That's another question I get all the time. Yes, the money comes from the federal government and the state government if you live in New York State, right? Important to note about state aid, state grants. In order to receive a state grant, you must live in the state and pay taxes to the state where the student will enroll. So New Yorkers, we're a New York school, so you have to be a New York State resident. I'm sorry to all of my New Jersey friends, but you're not going to be able to take New Jersey state aid and bring it out of state, right? It's not portable. Of course, all federal aid, doesn't matter what state you live in, but that's the nature of state financial aid. The biggest source of money on this screen really comes from the college and university, right? At Yeshiva University, we spent $46 million last year in making Yeshiva University affordable for families. We have 2,300 undergraduate students on campus, and we spent $46 million. 8 out of 10 students receive some form of financial aid. And this is what we strive to do. This is how we make Yeshiva University affordable and make it work for families, and have been doing for years. As you can see, the federal Pell Grant, the maximum grant is $6,400, $6,500. In New York State, the maximum state grant is $5,100, right? So those are hugely helpful. That's almost $11,500 between those two grants. But if Yeshiva University doesn't add additional aid to that in the tune of $20,000, $30,000, $35,000, that's the make or break money. That's what helps make YU affordable for you and your family. Another thing students should consider is working on campus and being employed. Many schools will have work-study opportunities. Many schools will also have on-campus employment for non-work-study recipients, right? In addition, you can work wherever you want. Nobody's going to stop anybody from working, you know. I'm not a huge fan of students working as soon as they get to campus in their very first semester. I love it when students are working over the summertime and saving money. Yes, working and saving as opposed to working and spending, but I leave that to you. But there are many, many students that work right away, come on campus and work, and we're only talking about sometimes 4, 5, 6, 7, 10 hours a week, and just so they have some pocket money. So there are jobs available on campus, and you guys should definitely be looking at those. I also want to point out that as an upperclassman, some students are able to work as a dorm counselor. Not an easy job, and also a very competitive job. But if this is you, if you have the right personality for the job, being a dorm counselor, especially at Yeshiva University, carries with it a dorm credit. So whatever the cost of your dorm is, you get your housing covered while you're a dorm counselor. Again, that's not going to happen in your first year on campus. But in subsequent years, you will see the opportunities to apply for and interview for a residence hall counselor. And you should be paying attention to that. That can really help with the cost of education. Okay, certainly student loans are very, very popular right now, especially right now during the COVID phase, because all of these loans that you see on screen right now are actually interest-free. The presidential executive order has halted interest on student loans. They've also halted payments, not only the interest, but payments too, for people who are in repayment right now. So if you're in repayment and you're done with school, if you're a graduate student, you don't have to make payments on your loans. It's a tremendous help. It was one of the easiest things that the federal government could do during the COVID era to assist families, that extending unemployment benefits, mortgage protections, and they did. They acted right away and said, okay, all interest and all payments are suspended. As of right now, these are the interest is expected to come back on October the 1st of 2021. Once we get closer to that date, I'm sure that we'll be updated on what the actual date will be. But certainly, Mom and Dad, this is, if the wisdom is that if you are going to reach to finance and education, that you take advantage of the student loans first. They are the cheapest thing going right now. How much can a student borrow? Well, you'll see. Freshman, $3,500. Sophomore, $4,500. And a junior and senior each year, $5,500. So the federal government is giving your sons and daughters a little bit less at the beginning and a little bit more towards the end. Why do they do this? Because they know, after years of history and experience, that if a student progresses from freshman to sophomore to junior to senior, that they will earn their degree. They will graduate. So they offer a little bit less at the beginning, a little more towards the end. That's to protect the student who may get through freshman year and maybe not persist the sophomore year. Let me say this to you. We are not talking about Yeshiva University students. We're talking about a national trend. I know that our Yeshiva University students are going to persist. They will get all the way through their education. Not only will they get their undergraduate's degree, but your sons and daughters are going to get multiple degrees in their lifetimes. I talked a minute ago about interest rates. Look at this. Look at the interest rate once that late loan gets to repayment, 2.75%. Now, of course, that's a fixed rate at 2.75. That's as good as a mortgage is right now, right? So I know that nobody wants to borrow, and I know that it's sometimes a delicate thing to think about. But Mom and Dad, if you're going to reach to finance and education, you can't ignore what the interest rates that the federal government is offering your sons and daughters, right? Is there a fee? Yes. It's a 1% fee, okay? But other than this interest and the fee, there are no hidden costs. There are no penalties to pay off loans early. So again, the wisdom is this is what you should, these are the first thing you should think of if you have to reach to finance and education. The lender is the U.S. Department of Education. It's the federal government. And there's certain protections that come into play because it's the federal government. This is not the private industry. This is not Citibank and Sallie Mae and Chase and other lenders like that. This is the U.S. Department of Education that would be lending your sons and daughters this money. Yes, there are repayment periods that can extend up to 30 years. Please don't take 30 years to pay off the loans. Typically, it's 10 years. I find that students pay them off in less time than that. That's 10 years after they're done with school, after they complete their undergraduate degree and perhaps graduate program, perhaps medical school, law school, right? We know that these amounts that I showed you a minute ago, if a student's going to medical school, that's just a drop in the bucket of what medical school costs or what law school costs. Again, the provisions, because they're federal loans, there are teacher loan forgiveness programs, certainly public service loan forgiveness programs, and income contingent repayment options. Lots of protections for families and students in the federal direct loan program. Is there a program for parents? Certainly. Certainly the feds want your sons and daughters to achieve their degree, so they even have a loan program for mom and dad. Note, the interest rate is 5.3%, so I'm not at 2.75 anymore. If you can beat 5.3, go ahead and beat it. No worries, right? The university has nothing to gain by either your student or you taking out one of these loans. We're not making anything on it, right? It's a financing option for you. And also the fee is 4.2%. So you really got to think long and hard about parent loans. And if you have your own financial strength, your own personal banker, a home equity line of credit or something that's going to beat 5.3% and 4.2% in fees, go ahead and beat it. We want you to do that. But many of you, this will be one of the best financing options that you have out there, the federal parent loan for undergraduates. So I've just given you a lot of information about grants and scholarships and loans. How do you apply for financial aid? This is the form. This is the website. This is the only website you need to go to, studentaid.gov. When can you file? In the third bullet for the 22-23 academic year, you can file after October 1st of this year. Indeed, you should be filing after October 1st of every year. So for you guys, you're talking about October, for the upcoming October 1st season, but every year you'll have the opportunity to file the FAFSA starting on October 1st. Again, by that time, all or most of you will have already filed your 2020 tax return by that time. Yeshiva University will not ask you to file any other form. Other schools may ask you to file the CSS profile, but Yeshiva University does not. The application process says to go to the federal website and submit the FAFSA. Make sure that you meet the school's deadline, right? That's very, very important. If you get it done sometime in the month of October, no problem. That would be great. We should probably want you to do it by the 1st of January at the latest. Our deadline at Yeshiva University will be February 1st. That's February 1st of 2022. That's when we want you to file. If you're filing at other schools, you got to check those schools to see what their financial aid deadline applications are. Again, the FAFSA is the only form that Yeshiva University is asking you to file. We are not asking you to file the CSS profile. Something that you'll need to do, which you actually could set up right now, is set up your FSA ID. That's what you are going to use to sign the FAFSA, mom and dad. In addition, it's also the student will set up an FSA ID. You will need 2 signatures or IDs to sign the FAFSA. So it's definitely, you don't want to print and sign a form and mail it off. You definitely want to use the FSA ID because it's immediate. It's kind of like setting up a password and an ID on your bank account or a credit card or something like that. They will authenticate it and they will verify your cell number, your email address, and things like that. But you should go through that process. Once you set up your FSA ID, it will stay with you for life. So that's something that you can pay attention to now and have it done by the time you sit down to file your FAFSA after October 1st, right? Folks, certainly there are circumstances that are going to come up that are going to change what's going on. By the time you get to October 1st of 2021, and you're reporting 2020 information, things may be completely different in your financial household, and we get that. Some of those conditions might be things like a change in employment status, medical expenses that have come up suddenly, etc. So those kind of special circumstances you need to get across to the school, to us. We'll have some contact information coming up in a couple of slides where you can do that. I also want to point out that at Yeshiva University, we understand that you've been paying K-12 tuition for years, right? That it's not a choice and that It's something that you've done and continue to do, especially for your younger children. So we are going to take a look at, we have a form for that. I'm not a forms guy. I don't like making you file forms, but we've got a form, a simple one-page form that we're going to collect that information from you, and you're going to tell us, I don't need to know about your college students. The FAFSA has already collected information about your college students, other than the student who's applying right now. But we are going to collect information about your younger children on this form. That's the website for it. So please let us know that information as well. There are plenty of places where you can go and search for private scholarships. I've listed 3 fantastic websites on the screen, FinAid.org. Everything I've told you today about the FAFSA, about grants and loans and cost of attendance and expected family contributions, please be an educated consumer and certainly go look all this stuff up yourself. I encourage that. And fastweb.com is the largest scholarship search web engine out there, and it's free. That's the important thing. These things that I'm listing here are of no cost to you, just like the FAFSA, which is no cost to you. What's a typical timetable? You get the FAFSA to us by February 1st. We're going to be sending a financial aid award letter, which is what you want in mid-March. We're talking March of 2022, a year from now, and then you can determine your net cost, right? That's the important thing, folks. You know what the sticker price is for all the schools right now, including ours. But what you want to know is, what's the net cost to me? So if you follow this process and you go through the steps, hopefully by next March, while your son and daughters are still seniors in high school, you're going to be able to determine your net cost. And of course, the schools want you to know what your net cost is, because we also want your deposit by the 1st of May. So that's a typical timetable, and that happens to be Yeshiva University's timetable. And then, of course, yes, is your son or daughter going to study in Israel? We know many, many, many of your sons and daughters are going to spend their first year in Israel, right? Yes. What are the benefits of being on the Daniel Abraham Israel program? Is that you will have access to your federal and state financial aid. If you're eligible for a federal Pell Grant or a New York State TAP grant, or you want to take advantage of a student loan or a parent loan, you can, and use that to help pay for tuition in Israel, right? We're also going to offer you a 10-month payment plan, a flexible payment options, right? You will be able to use your college savings plan to pay for the Israel program. If you go straight to the school in Israel yourself, you're not going to be able to use that 529 plan. That's the beauty of going through Yeshiva University and our program. Hey, we talked about the tax credit. Well, we're going to issue you a 1098-T that you're going to take to your accountant and hopefully get a tax credit for the year in Israel even, not just waiting till when the student gets back to the U.S. and starts college. Of course, you're going to get all of your credits on one transcript. So I know you're not thinking about that right now, but when the student's applying to graduate school, that will come into play. And also I've listed a website for Masa on the last screen there. You should visit them. They are a quasi-Israeli government agency that offers funds to certain students to study in Israel, not only Americans, but from all over the world. So I give you their website, and you could certainly reach out to them and find out more information about scholarships for studying in Israel. On screen, we've given you all of our information. Our website is there. Our phone number is there. Our hours of operation. If you go to our website and click the Contact Us button, which is right at the top of the screen, if you have a question, ask, please. I have dedicated professionals who are answering the phone and emails, and we'll get back to you with whatever questions and help that you need to get yourself through the process. So I trust that this has been a helpful presentation for you. I certainly look forward to seeing you on campus. And in the fall semester, come to the fall open house and we can do it all again. I also will be visiting many, many high schools, either in person or virtually, in the upcoming season. So I look forward to digging into some of these topics a little bit more as we move forward. Thank you very much and enjoy the rest of the open house.